The US stock market has been excessively volatile. Every day it's a wild one. What's impossible to determine is where the bottom is. Nobody knows. What we can determine is where we keep our savings throughout this time. People have the ability to manage their finances and prepare for any potential devaluation of their assets. Sadly, most individuals will simply watch their investments vanish. In Wednesday's trading session, most people were completely unaware why the stock market rose over 1,000 points. So let's take a look. You came here for the truth, so let me unveil that for you. First, I will show you exactly what occurred in this trading session. Then I'm going to show you why it happened. And then I want to cover the underlying issues which are not covered. Let's begin by taking a look at this article out of CNBC. Dow rallies 1,000 points, logging its biggest single day point gain ever. Important to understand this because we have seen the markets being extremely volatile, and that is truly an understatement. You're looking at this right now, 1,000 point gain, not in percentage terms, but in point gain. That is the biggest ever. It comes after the Dow falling through October, November, and then December, and now we have this huge rally. And what exactly caused this to happen? Was the Federal Reserve behind it? Did they suggest that QE4 would begin? Perhaps they suggested that their interest rate hikes would cease. Or was it a TARP-type bailout that was introduced from the US government? Or maybe the trade issues between China and the US have been resolved. I will say none of this happened. Yet the market came up by 1,000 points. Let's look further into it. Way up across the board. All three major US stock indexes gained more than 4.5% to thwart bear market. They were basically right there, and the market pushed higher up. You can see that this chart going from 2009 up until present day in terms of percent has almost hit a record. However, in terms of points, it has escalated to new highs, never before seen all-time record point gain in a single trading session. The market fundamentals haven't changed. All we have seen here are the algorithms taking advantage of an event that has taken place here, and I'll show you that momentarily. Here are three crazy market statistics on a wild day of trading. To say that the US stocks trading had been odd this week seems like an understatement. You're seeing it wildly going up and down. It has been a crazy week. In fact, it's been a crazy 3 months. All major US indexes gained at least 4% on Wednesday, the first time since 2011. Imagine the stock markets, how massive they are in the United States, and they went up basically 5%. I was very surprised that they escalated over 1,000 points, but here we are. And then we look into the reason why, and suddenly it's not so good. The Dow registered another oddity. Its performance perfectly mirrored its last trading day. On Monday, all 30 member stocks finished in the red. Today, all green. That's the first time that's occurred since 2015 and just the 10th time since 2000. The market is completely out of whack, and I do believe that computer algorithms are playing a huge role in what's happening with the oddities that are occurring today. You saw Druckenmiller and what he said. A person who's going 30% a year in performance, suddenly he can't figure the market out. That is a bad sign for someone as big as that. Let's move on to this. Dow daily point change showing you that the market escalated over 1,000 points. This chart goes back to 1920, and obviously there are more points in the Dow today than they ever were before. So you're seeing this, but I wanted to just explain to you the fact that in terms of points, it's the highest ever, but not in terms of percentage. Crude oil has increased today, and you're seeing an absolutely volatile few trading sessions. Looking at this over the past week, you could see on the 24th, I believe it is, coming down quite significantly from about $46 a barrel down to, let's say, $42.50 a barrel. And then suddenly, with all of the markets coming up, it shoots back up to $47 a barrel. This is incredible to see it being so volatile and a market as big as this either going up or down at such a rapid rate. Truly odd. Looking at this segues into the next issue that I wanted to discuss, which is basically why this occurred. While the article out of MarketWatch talks about all these individuals who claim what they're doing and how they're so wonderful and they time the market so perfectly and so on, I need to get to what's overlooked in this article. So who's game to go back in? Try pension funds who have just a few sessions to rebalance. They need to sell bonds to buy $64 billion in equities. This type of information wasn't covered by the mainstream media, just this mentioned here, and then I'll show you a chart in a second. But of course it's overlooked because it doesn't explain to people why they should buy the latest hot stock. Not talking about the FANG stocks, not talking about why you should purchase. It is telling you that the market fundamentals simply are not the reason why this occurred, and yet it's simply the fact that these pension funds had to sell $64 billion of bonds and buy equities. This chart here comes from Wells Fargo. You're seeing the data right in front of you. I wanted to show you this in particular. Total equity, $64 billion. Estimated rebalancing needs for U.S. defined benefit pension as of December 20th. Pro forma pension portfolio. You're looking at the U.S. large cap, small cap, international developed and emerging markets. They break down the percentages here, showing you what occurs that they need to move this money over. In doing so, it's obviously going to cause this massive inflow, and you're seeing that represented in the stock market right now. It might not be the end of it. I don't know when it's going to end and what exactly was triggered in the computer algorithms as a result. Is it just one day of 1,000-point gain? Maybe they're going to buy more tomorrow. Maybe they're going to buy more the day after. We'll see how this plays out, and I'm just curious to know exactly how all of the algorithms are triggered by these purchases. Just to show you on the bottom left side, projected rebalance needs in terms of $1 billion, and you could see where that's all broken down in the following columns. So this is the information not covered by the mainstream. Wells Fargo put out this data, and I just wanted to bring it to you. I think it is absolutely important. I know a lot of my subscribers actually brought the information even before I was able to do a video on it. Obviously, this is important for you. If you don't know about it, if you do know about it, it's excellent as well. We need to keep our eyes peeled on the reason why. No, it doesn't necessarily matter that the stock market went up 1,000 points or it goes down by 1,000 points. We need to understand why, and that's what you and I do. And I really thank you for being here, because this is the type of channel that's all about the data. We just want to know what's going on, and then we can make the judgments for ourselves. We don't need to be told what to do like they do on CNBC, and people are telling you and screaming at your face. Jim Bear Stearns Kramer telling you to buy up that Bear Stearns stock. It's doing so wonderfully. Didn't exactly end up in a good position. Even though the market has done so well on this trading session, it's still possibly going to end up as the worst December ever. So in terms of percentages, by the time you see this, it's probably not valid anymore. I just wanted to mention the fact that we have seen October being bad, November was bad, and December has been even worse. The markets had been declining significantly, and really today's trading session was the first very good day, and obviously an extremely good day to say the least. I'm interested to see what will happen as a result of today's trading sessions, if they're going to take some profits, if they're going to buy more into this, and they're going to get suckered in to this rally that occurred after a very long and extended series of drops. Very quickly wanted to touch on this, the S&P 500 versus the 200-week moving average. So they have the 200-day moving average, and they have a whole bunch of different moving averages. The technical analysts like to see this type of information. Just wanted to show you that we're right at that borderline that makes it not very good. All right, so it all depends on how you're looking at this, how close you want to pay attention to something along the lines of these moving averages. But I think it's important to note what you can see here on these pieces of technical data and how that really follows. Okay, the technical analysis itself doesn't mean anything, but if you see that patterns form over and over and over again, then you can use those in conjunction with all the other data that you have to make sense of what you're going to do with your assets. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these 2 books have everything you need, from the foundation, the history, the asset classes, making money, and so much more. So check that out at the link in the description if you want the audiobook that's available at themoneygps.com.